Buyers, borrowers, sellers, and real estate agents, this video is for you. The Federal Reserve's rate decision was announced last week. I know I'm a few days late, but I promised a recap. Before I do that, though, I just want to make sure that we know what the federal funds rate is. Now, this is the rate that's set by the central bank, which is the Federal Reserve, and it's the interest rate at which banks borrow and lend to each other overnight. Now, that's not the rate that consumers pay. The Fed's moves still affect the borrowing and savings rates that we see every day. And now they've paused. This is the fourth meeting in a row that the Fed has not raised rates. It's the longest pause we've seen since March of 2022. Now, the chairman of the Federal Reserve, his name is Jerome Powell, and he said, "We are trying to get comfortable and gain confidence that inflation is on a sustainable path down towards 2%. He went on to say, "We want to see more good data. It's not that we're looking for better data, we're looking for a continuation of the good data that we've been seeing. It gives us confidence that we're on a path, a sustainable path to 2% inflation." That's what he said. So, what does this mean for you? Well, interest rate cuts could and would lower borrowing costs for consumers and businesses. And that could trigger potentially a burst of economic activity through greater household spending and company investing. But the Fed doesn't want to risk a rebound of that inflation. They're risk averse. So if we cut interest rates too quickly, since stronger demand could lead to an acceleration of price increases, that could cause like a frenzy. And the last thing we want to see is people rushing to the stores to get toilet paper or lines at the gas pumps like money is free. This is also why we're seeing people go crazy on these houses, as I'm seeing and we're seeing lower list prices, which is causing this line outside the door for miles effect at open houses. I almost wish that could stop, but that's probably an entirely different post, and I don't think I'm even going to do that. So let's go back. To recap, the impact of the recent federal meeting might have caused some nervousness. They didn't even do anything, but this is a normal part of the process. Okay, the decision not to raise rates that the Fed sees is a sign of positivity and should be encouraging to you. Fluctuations in interest rates happen and they can be managed. Your focus now should be on embracing the journey of homeownership with optimism and resilience. I've said it before. Let's talk about your needs, your comfort levels, as every mortgage doesn't fit the same foot. If you'd like to learn more about how your dream can come true for you, comment yes below and let's chat. Bye.